All right. Good evening, everybody. Let's do a sound and visual check. How's everybody's weekend? If you can hear me. Happy Sunday, everybody. Yes. Yeah, Hoop. Not a good day for the Bears, right? In the markets and in the NFL. Yeah, it was quite. I enjoyed it. It was shocking. It was funny. Tomorrow is going to be great. Tomorrow is going to be great. Okay, it looks like everything's working great. So let's get started. As always, I'm Coach Dakota, Coach DBA. Welcome to Slow Markets. And in the YouTube chat, there's our Topstep risk disclosure, and everything we say and go over each night is for educational purposes only. So how about this market? What a day. Very, very volatile, very ugly market on Thursday and Friday. This is the daily charts on the Nasdaq, and as you can see, we started to sell off. I mean, this is quite the sell-off for the past 2 days, and we're starting to recover some of that, and that's why I was kind of joking about it wasn't a great weekend for the Bears, because those that are bears in the market are not doing too well. Just like the NFL team, where they just muffed. Bears will do Bears things, right? They get super excited, and then at the end of the day, they tend to just take the loss. And I think we might be seeing something, similar, right? Where we've had what, 1, 2, 3, 4, 5 very, very bearish days, or at least these last 2 have been bearish, and now we're starting to recover. And if we look at the 1-hour chart, you guys can see a little bit of what I'm talking about. Let me make it look a lot clearer to everybody here. And yeah, look at this. Here's the sell-off, and is this a V-shaped recovery? I mean, as of right now, we are pretty dang bullish. We're up, 200 points, 100 points since we opened, 130 points since we opened. Things can change fast, as always. Where can this market go? It's the Nasdaq, and I'm a bull at heart. I absolutely love buying the markets. But if we look in general, just the daily chart, every single sell-off that we've seen, since August has been buy the dip opportunities. And I mean, you guys could see it. You don't need me to draw it out for you. And of course, it's never going to be perfect. Is this going to be similar? Maybe. Can we see a continuation down? Sure. Yeah. I wouldn't be surprised if we see, 20,000 down and test this support. That is possible. But I'm not going to plan for it. I'm going to be looking for this market to find support and maybe run up to, find an area of resistance. So if we look at the hourly chart, and then we'll go through these other markets as soon as I'm finished, taking a look at the Nasdaq. So I think we could just go up and find an area of resistance, right? So just like always, if we're looking at this as a pullback, maybe we could look to the left and we look for some market structure to find an area of resistance. So, what will be the resistance? It's anybody's guess. That's part of trading, but I like very basic technical support and resistance. I could see us, we still have some ways to go. Maybe we're going to get up to the mid to upper 600s. Maybe we could even see a test of these 700s, or even, upper 700s. Not really sure. Typically, I like to look at the more recent price action, because that's more important to me typically, where can we see us get to 790s? That would be the area I'm looking for. This is an hourly chart, and if we really do think that the trend is now switched, which on the intermediate trend, the current, what we're seeing in front of us, the trend is currently down. Even though on the longer time frame, if we're looking for an hourly chart or a daily chart, we're just kind of going up and to the right, where it's been buying. These dip opportunities have been really amazing, and it's been great opportunities. Every single time there's a sell-off like this, typically there's fear, and where there's fear, right, that's when it's time to get greedy. When there's greed, that's when the time to be fearful. What is that? Very, very common very common saying, be fearful when others are greedy, be greedy when others are fearful. And I think maybe every single example shows itself in these markets where these sell-offs, we start to see people panicking, we start to see the bears come in and all over social media. And a lot of times we just end up, doing this, where we just go straight up, or we start to find some market structure and we start to continue the trend up and to the right. And so I'm looking at this as relatively the same. Maybe we go and we find some area of resistance, and if I was going to short this market, I would probably wait to see if we could get up to this area. This was support. Maybe it can become resistance. There was a little bit of hesitation right here at these 690s, 680s. So maybe that could be an area of opportunity as well. So as we zoom in, we could start to see that market structure a little bit better. And yeah, sure enough, there you go. You could see that there was an area of support. We bounced off that. And, maybe this support will become resistance. And then if not, we have this one up here, and then maybe another one right around these 740s. So very simple, very straightforward. This is the way that I view the markets, and it's been very nice. We did break through a lot of resistance. There was some right at the 600 level we've broken through, and as technicals be it, we break through. When we break through, we pull back, we test it. And let's see if we could get continuation up tonight. Maybe look for opportunities to buy this on pullbacks. I'm not sure. I'm going to be less of a buyer on pullbacks tonight because it is the Asian session. We've already came up so far in an Asian session. This is a lot. This is a big move for the Asian session. It's 0.75%. It's 150 points from the bottom. We opened up, we went down, and from that bottom point, we're up 150 points. And so it's a lot harder to buy the market right now. If anything, it's tempting to look for reversal trades and maybe get some type of reversal for a move. Maybe we're up at 619 right now. Maybe we look for a move back down to where we opened. That is a possibility. That's a big move. That's over 100 points. Looking for a move back to where we opened. But I think an area of support and resistance might be more reasonable. Maybe looking for, these 580s, or, this has a few points of support and resistance around 530s, 540s. This is a little bit of a harder one to trade tonight, where we are so bullish, but the opportunities were basically at the start, at the very open. Shout out to Rips. I seen that he caught the open almost beautifully. I'd love to know and see exactly what he was doing, but he took advantage of the Sunday open tonight in a big way. Next, let's move on to crude oil. Then we'll take a look at the Nikkei and then finish it off with some gold. But crude oil. We did get that sell-off. Let's take a look at the hourly chart first. So kind of as what I was looking at was a test back down towards the $67 a barrel, and we did gap down. You could see that we gapped all the way. We went as far as 66.50s, and you could see every single time we came down here, there's been great buying opportunities. The question is, can we get all the way down to these 64s? 64, maybe testing 65, the mid 65s. I think I'm going to wait myself to see if we can get down to these 64s, because this market's looking bearish. And you could see this is an hourly chart too, so it's kind of zoomed out. We've tested it once, twice, third time we're starting to break this 67 right now. We're trying to stay above 67, but I wouldn't be surprised if we come down to 64 this week. That's possible. You can see we gap down tonight. This can be looked at as pretty bullish, to be honest. This can be looked at as bullish. I'm very similar to what we've seen here, where we had a low and then we ran stops, right? Ran liquidity. And so looking from a bull perspective, is that the same? Can these be similar, where we could look for maybe a rally and a retest of I don't know, 67.80, 68. Like that wouldn't surprise me either. So we're kind of in a decision zone where traders that are looking to buy this market will find good risk reward and some decent opportunity down here, which they've already had if they were buying the open or looking for something as simple as a 3-bar reversal on the hourly chart that you could see that just happened an hour ago, where we did have a nice 3-bar reversal after we gapped down. So from a bullish standpoint, it looks very attractive in terms of risk reward, where we could easily get in and limit the risk and have a decent reward standpoint. And then from the bear's perspective, it's hard to sell it down here. I would much rather wait for some type of a pullback and then look to short it. Very similar to what we've seen earlier this week. Zooming into a 5-minute chart, I think it's more of the same. I think it's, the 5-minute chart. Let's see. This is the first time I'm looking at the markets. Just so anybody who's new here, they know and they understand, this is the first time I usually look at the markets is when I join. So I'm looking at crude oil for the first time this week. So yeah, you can see very, very bullish, right? Holding the higher lows, higher highs, equal highs. So maybe we could find some type of flagging pattern in order to look for a long entry, or we're going to look for a short on a pullback. Now, I'm not the best at shorting the market, so I don't know how much of a pullback we would want, maybe to an area of resistance, very similar to the way I was looking at the Nasdaq, where we're looking for areas of support and resistance to trade off of. And so if we are looking to short this market, then yeah, maybe waiting for a better opportunity and a better risk reward, a better trade location could be good, but who knows? We could easily just sell off and hit new lows faster. Now, moving on, let's take a look at Nikkei, the Japanese market, and ooh, what a rally! What a rally on the Nikkei too. Let's take a look at the hourly chart, and dang, did we bounce on the Nikkei as well? I mean, take a look at this major support back in September, the end of September, beginning of October. And sure enough, this was a nice level of support at the end of October, and we bounced. That's quite the rally that we're seeing these past few hours. And from a percent move, that's 1 3/4% of a rally. Let me zoom in, because maybe there was a decent. Obviously, I mean, this was a zone of support and resistance. Maybe if we're trying to tune it in a little bit more, there could have been some short opportunities. Maybe there was a short opportunity here on the Nikkei around this 38,500s. And let me zoom on a 5-minute, see what that looks like. Yeah, I think there could have been a short opportunity. Maybe there might even be a short opportunity right now. Just looking at it, I mean, this candle is pretty. That's a pretty big candle on the Nikkei. So if we used to short, like on the breakdown where we're at, the risk for me would need to be above that previous candle. So the risk is just a little bit too much, where my reward, I mean, the reward would probably be like 365, maybe 320, where that's not a good risk reward for me. So even though I might want to get into this trade as we start to go down, and I'm really good at calling trades, but I've been really bad at taking them here on the Nikkei. Last week, if you guys tuned in last Thursday night, that was an amazing trade on the Nikkei. If you guys remember that one, where I was short the Nikkei from up here. I was short. If you guys remember that, where I got in short, I don't know, like say, I think it was around these 880s. And my stop loss was right there. And overnight, we just sold off. Like that was a beautiful trade. I didn't hold it. I wish I would have, but that was the trade. Tonight, I don't know. I'm a little indecisive, very much like the Nasdaq, right? Where we're bullish, where we've rallied, the market is very strong, and you don't really want to short this strong market. I would actually rather wait to see if we see some type of market structure, like I don't know, like this, right? Similar to what we've seen here, similar to what we see here is more market structure, but it doesn't mean we can't sell off. Okay, let's move on. Gold. Everyone's talking about gold. Let's take a look at gold. Let's take a look at the hourly chart. And you know what? I'm not surprised. If you guys caught the session where I joined Deeyana during the London session, this is kind of what we were talking about. Is we talked a little bit about gold, and take a look at this on a daily chart where we zoom in here and we can see this nice sell-off, and looking to buy gold at areas of resistance, support and resistance. So yeah, this could be one, waiting for us to get down to these 25.17s, 25.20, but there is another opportunity, and I think we just seen it play out tonight where, take a look at this. There's some resistance right here. This was a major area of resistance. We broke through that, and so this is quite the sell-off, and this is a daily chart, and right there, this could have been, and this was, obviously, with the power of hindsight, a beautiful buying opportunity. You're going with the daily trend. You are buying when the market's reversing, maybe a 3-bar reversal on the daily. But we're day traders, so we like to zoom in, and we want to use smaller time frames when actually trading. And so talking about this more, right? Here's the nice resistance level here in gold, and it's showing. It looks like we went down and we basically tried to break it. We held up, broke above it. It's holding as support now. And it looks like just tonight we broke through this level, and that was quite the move here in gold. I mean, yeah, it looks like the markets have been moving. Markets are moving. A lot of the opportunity has came already. Taking these breakouts, this was a very, very simple and textbook breakout after the fact, right? We went up, tested, pull back, and then there's that breakout. Simple, straightforward, and yeah, where are we going next? Let me look at an hourly chart and see. This is one where, just like the Nikkei, just like the Nasdaq, just like these other markets, to looking for longs, and if you've missed your opportunity, it doesn't make sense to chase it, or at least I'm not going to be chasing it, even though I'm bullish, and yeah, I would love to be long right now, and I'm not going to chase it because that was a decent move. That move has already happened. Of course, we could have a bigger move, but just looking at this right now in terms of perspective, we've already had like a one true leg, or like this has already came to fruition. Like that could have already been the move. So I'm not going to chase it here because it's not a good risk reward, right? The way that I look at this and the way that I like to trade, like this isn't the risk reward that I'm looking for. I would much rather wait to see if we get some type of a pullback and then a 3-bar reversal, maybe some consolidation, and then look for that continuation to the long side. Now, because you wait, because you're patient, you might miss out. That's part of the game, right? Just when, could you imagine the people who were waiting to short this last week and they missed out on a really big move to the downside? Well, that's what happens in trading. When you're patient, when you're disciplined, you miss out on a lot. That's the reality of trading. And if you zoom into the 5-minute chart, yeah, we're starting to sell off quite a bit. So that's just part of trading. You guys see me here every night looking at these markets. You guys see me missing opportunities, watching these markets, missing the opportunities. Like that is part of trading. It sucks. It's unfortunate, but that's why trading can be very, very hard, and why such a small percentage of traders are consistent is because of this, because of fear of missing out, because of that impatient of needing to trade and wanting to be in the trade, and like, oh my gosh, you're seeing these pictures on social media of everybody making all this money, and you go back and say, wow, that was such an easy trade. Like, look how easy that was. We could have just, buy on the breakout and, make all this money. And yeah, it's easy to do it with hindsight, and it's easy to do it after the fact. But the hard part is after the markets have moved, then having that patience, having that discipline to just wait. Let's just wait. We need to wait for another setup. and wait for the market to give me what I'm looking for according to my strategy. Process over profits. Will gold come down and pull back and have another opportunity for me? Maybe. Maybe not. If not, then that's unfortunate, and I miss out getting a trade on gold. But this is looking pretty bullish. It is. We do see a spike in volatility right at 8 p.m. A lot of the time. So maybe we see maybe we see a deeper pullback consolidation, and then I would get into this trade. So let's see if that happens on gold. I'm going to look for a deeper pullback, maybe some consolidation, whether the consolidation is there. I might consider it if we consolidate here for a longer period of time, and then look for that continuation back up. So that's what I'm going to look for. I'm going to try and be patient. Very similar to what the traders at the open, everyone at the open, where that was a beautiful flagging opportunity. Here's an example. It looks like the gap didn't get filled completely. This can be tricky. Traders who are looking for gap fills, we didn't fill this completely. So is that still considered a gap in your mind? I don't know. That hasn't been filled, and I'm sure we could look at that at these other markets. Let's take a look back at Nasdaq, and then we'll get to some questions. Yeah, Nasdaq doesn't really have a gap. Crude oil doesn't have a gap. Every gap was filled besides gold. Gold was just gapped up and kept going. So, all right, let's get to some questions. We'll watch this market. You guys let me know if you see anything moving. I do know I usually look at Bitcoin, so let's take a look at Bitcoin. Yeah, there's the gap. There's a gap that needs to be filled. Bitcoin's that gap. And let's see, I'm going to go ahead and I'm going to trade Bitcoin on a demo account because I've been practicing Bitcoin. I've been watching and testing out Bitcoin. So I'm going to go ahead and practice it. I'm going to trade Bitcoin in a demo account. Shall we do that? Okay, I'm going to jump out of here. We're going to get into a demo account, and we're going to take a look at Bitcoin, and I am just going to buy it. I'm just going to buy it at market, and I'm going to play for the gap fill. So here we go. Let's buy Bitcoin. I'm going to risk. I was going to risk 1,000. It's quite the move. It's micros. So I'm just going to scale into this. I'm okay. I'm fine with risking 1,000, looking for Bitcoin to retrace back up there. But Bitcoin moves over the weekend. So this really isn't a valid gap, huh? Yeah, Godwin, this isn't really a valid gap because Bitcoin trades over the weekend. So there's a lot of data missing from this. It's not a true gap. Now that I'm thinking about it, and that's why I'm doing this in a practice account for this reason. Interesting. Well, let's just see how this plays out. It's the breakout trade. So, yeah, I don't know. Does Bitcoin fill the gap? I mean, it's not technically a gap. We had this conversation last week a few times. Yeah, gap is invalid because Bitcoin's always open. But here's the thing. I don't think this futures market affects it too much, does it? There's a gap in this futures contract, right? There's a gap in this futures contract, but there's not a gap in Bitcoin itself. So I don't know. That's an interesting conversation that I don't really know. That's interesting because there's a gap in this particular options contract. And that's why it's risky, right? Especially this product. Could you imagine holding a contract or holding a position in Bitcoin futures and having that product be active over the weekend and you not be able to close out your position until after we open up on Sunday? That's scary. And that's the perspective that traders need to understand in the markets, right? Where if the markets are closed, you don't want to be holding a decent position in the futures market for that particular reason because of these gaps. And this technically isn't a gap based off of price, of Bitcoin price. This is a gap solely because of Bitcoin futures being open over the weekend and contract is not. I want to risk $1,000 on this, and there's my point of invalidation. So if we pull back, I'm going to keep buying it till I get to $1,000 risk. You would cry inside. Yes, Bitcoin futures controls spot Bitcoin. Imagine holding the put though. It's always nice to look at it from, yeah, if I was short over the weekend, that would have been nice money. But yeah, this is a good example of what practicing a new instrument, this is what practicing a new contract, a new product is very, very important to do that in a demo account to where you're not putting money at risk. Because I don't know how Bitcoin acts. These little details, which are very, very important, right? To understand, guess what? There's no gap on Sunday nights. Bitcoin trades through the weekend. These news events affect this market. This is the small nuances of the product that I'm trading. And I just don't know Bitcoin enough to feel confident in trading it yet. Usually about 3 months of practicing understanding the product, then I could start to slowly implement it in my live account. Now, I'm not just going to go straight in like normal size. Like I trade 5 minis on the Nasdaq, and in no way would I just jump into Bitcoin trading 50 micros or that level of size in a product that I don't have that level of confidence. I've traded Nasdaq for years, and comparing that to Bitcoin, where I've only been watching it for the past few weeks because of just everything that's going on in the volatility, and of course everyone's talking about it. Okay, I'm gonna just keep buy a few more here. I want that risk to be at 1,000. And actually, that might be a little bit better. So let's go through. I'm going to talk to why I have my stop loss here so far. I do see this. There's a lot of support and just a little bit lower. So a little bit of support right at this 90,600. And I'm going to build a position. And I'm looking for this thing to keep going up. That's it. Simple. This is me just testing it out. You guys can see and watch how I test out a market. And feel free to ask me any questions. You see, I've done it a few times. I look and I risk a dollar amount. I'm looking to risk $1,000. This is where my stop loss is going to be. And I'm fine building any amount of contract size until this risk gets to 1,000. And I will not change it like, oh, okay, I'll move my stop loss down here. Well, if it's $1,000, sure, that's still valid. But, this to me is a decent stop. But I don't know. I have not traded Bitcoin enough. Coach, go through. Coach Jay called longs on Bitcoin at market open. Oh man, Coach Jay, Coach Jay, big shout out to him. He's covering for Nick for a tick, correct? He was here just a few hours ago. Yeah, I think he's going to be taking it. I'm excited. Coach Jay is one of the best coaches. I've enjoyed every moment I've had the opportunity to work with him. So let's get to some questions. We'll watch how this plays out. I want to get into a bigger position size. I want to change that just because of the dollar amount. So can you give an example of that 3-bar reversal? Reversals are the best trade and no clue how that works. Okay. So I would say, and I would 100% recommend using this amazing tool called Google. And Google 3-bar reversal, and click on that and do a little bit of research. There's some great information on what a 3-bar reversal is. Okay, next. Dakota, can you give me the name of the Series 3 test book you have? So I gave away my Series 3 book that I need to send it out. It is called the Securities Training Corporation. Securities Training Corporation is the website that I purchased my trading material, my training for the Series 3 and the Series 30 through. When you repeatedly, here's a good one. Coach Dakota, Friday, when you repeatedly were going long, you said it's the same trade. It sucks, but I have to follow my process. What setup exactly did you see? So let's go over that. If I'm going to go ahead and make this into a couple charts so you guys could follow along with Bitcoin. But let's do this. Who wants to know and who wants to go through how I was trading Friday? Everybody in the chat. I want to make sure. Do you guys want me to go through my Friday trading tonight and what I was seeing, what I was talking through, what I was looking at? Me? Yeah, I think it's going to be a unanimous yes. Okay, yeah, I don't think I don't even need to run a poll. It's just a yes, right? Okay. Yes for everybody. All right, well let's talk about it. So while we have this Bitcoin trade open, we're just gonna kind of put it over there on the side. Let's talk about Friday. Why and how I traded on Friday. Actually, I might need 2 charts on this. So I'm going to just jump into a couple more. Get my risk to 1,000. Okay, that's close enough to 1,000. If we get midway, I'll add 1 more. But I want to jump into the Nasdaq, and we'll talk about that. Let's talk. There you go. So what I like to do is, if you guys see me trade on Friday, I have a 5-minute chart on the left, which we're now selling off. And I have a 100 tick chart on the right. Okay, so this is the way I have it set up when I trade the New York session. Now that's different than the Asian session. The Asian session is very slow, and I trade it differently. I use higher time frames. You guys see me go through it every single night. But yeah, listen everybody, like this is as good as it gets when it comes to me talking about my strategy. This is what it gets to in terms of, how do I explain this? It's not a secret, but if you listen to what I'm talking about tonight, this will answer the question, Dakota, what's your strategy? Like, how are you making all of this, quote, money? And like, how are you on the leaderboard? This is as close to it as close as it gets to me explaining that, okay? Now, yes, tonight's class is only an hour long. We only have 25 minutes, but I'm going to do my best to really fit as much as I can in the next 25 minutes. So listen to this, like record this, whatever. I don't care that it's on YouTube. I don't care that it's free, and I don't care. There's no secret, anybody. Like, there's pointless on selling classes. Classes on how to trade the market is just BS in my point of view. It's just irrelevant. Okay, it's people trying to sell something because whatever reason that is. So now going to the Nasdaq, the way that I look at the markets is I'll look at the 1 hour time frame, and I will determine support and resistance. It's the same exact process. So understand, the same process that you guys see me every single night, what I go through in the markets, okay? Every single night, I look at the higher time frames. I look at the hourly and the daily. The daily doesn't change very much, right? Because the daily chart, you only get 1 candlestick every day. And so I start out on the daily. You know, I'm looking at previous support and resistance. Simple, straightforward. Okay, so simple, straightforward, like support and resistance zones. And then what I'll do is I'll zoom into an hourly chart. It's the same thing, same process every day. So on this hourly chart, okay, on this hourly chart, the areas that I'm watching, and on the areas that I was watching on Friday was, great, there's some resistance and some support here. It's a zone. It's not an exact number. It's a zone. So around 20,800, plus or minus, right? It's a plus or minus because you never know exactly where it's going to go. Great. Next, there's another level that can play out. We don't know if they're levels. They're only levels. If the market reacts around them, we have around 720s, 727, 729 plus or minus, right? And then now we have another one. And so this is an hourly chart, and I'll go through and I mark this on the hourly chart first. So you can see there's a decent one here. And then, this is where some discretion is. It looks like there might be one right here around the 640s. So look, there's a little bit there and there. There's a lot of discretion, right? There can be discretion. So that's where I was kind of looking at it. I was also considering maybe this. Like this was a rough no trade area, like most of the mid 600s. The next thing I do, I'll zoom into a 5-minute chart. And so remember, this was on Friday. And I'm looking, right? This is Friday. This is Friday's price action right here. But I was paying attention to this. This was November 6th. And so I'll go through and I'll zoom in. And I'll say, okay, great. Then I could fine tune it a little bit. And these zones look pretty decent where I'm looking like, okay, well, are we going to bounce here? We could bounce there. There's a lot of mess. It's really messy in this area. So it's going to be hard for me to take a trade, because there's a lot of mess. So the first ones I'm looking at is I always default to the most recent price action. So if I clear this and then I'm looking at the most recent, is going to be this. Like there's a recent one, there's a recent one here, and then there's one right there. So that is what I like to default to if I can't really get a good idea. And I'm looking at maybe there's a little bit of support and resistance right there. So that one's a little bit more important, right? And then of course there was extra confluence or whatever you want to say around this zone. So there's quite a bit right around 600 plus or minus a little bit. It's a decent zone. And then when I look over to the right hand side, and then when I start trading, I have an idea when I'm trading where I want to trade and how I want to trade it, right? So if you remember, the first trade I took, I think was here. Actually, no, it wasn't. I did not trade this. I did not. Maybe I did. I didn't. I don't think I did. I waited. I didn't place a trade until like an hour after the market opened. So my first trade was in here. Like this is where all my trades were. On my when I placed it. You might have to watch Friday morning fast markets, but this is where I was placing my trade. It was in this zone. And now if we look to the left, I was talking about was, take a look. It's very similar to this support that we have and that I marked out over here on the left, right? So there's a lot of support and resistance that I was marking out. And I was prepared because we don't know how the market is going to be when it gets to here, right? And then when we're trading, if we mark this level, it's a zone, 600, maybe 570. So it's a zone. I mean, you could evenly say 570 up to 610. So 570 up to 610, it is something that you could validly say it is a zone, right? But I mean, that's something that can be said. And then if I'm looking at this and I'm judging based when let me do this. Get there. Look at this. So I like to trade 3-bar reversals. So once we get to this zone, then it's like, okay, well, let's look for a 3-bar reversal. And so this is where I was taking some trades, and I was in 20 points in profit in like 3 of the trades where I bought down here and I had an opportunity to close it out for 20 points. And then I just stopped out for break even or a small loss. And I got chopped up right here. But this was an amazing trade, an amazing opportunity. Next, we did break through. We sold off. I did end up buying down here at these 530s. And so same thing. I went over here and I looked to the left and it was the same thing. So this one was a little bit more like, okay, could we see these? I was looking kind of at this, like, well, can we get all the way down here? Then there was a little bit of a hesitation right here at 530s, 540s. So I'm like, okay, well, this would be the next spot. If not, it's going to be somewhere right here. And I don't mind taking losses I do not mind taking losses, because if we just sell off and we just keep going down, I'm going to lose. I'm going to be a loser that day, and I'm going to take a negative day if we just keep going down, right? And if it keeps doing to me what it was doing, and I'm not able to manage risk effectively. Well, we did get down into, 534. Let's do this. I'm going to switch accounts. Oh, let's go. I'm going to switch to my live account, and then maybe we could see the order details. Nice, it kept the support there. So if we look at the chart executions, okay, yeah, so I was buying 541. So I was looking for a 3-bar reversal in this zone. We broke through. I was waiting, and this was my final trade at 541. So where's 41 at? Right there. So 541, and if we zoom in, I'm going to just clear this out just a little bit. And not only do I look at 3-bar reversals on the 5-minute chart, my final entry was 541, and I closed it out at 570s, 580. So I only caught 30 points on this trade. 30 points isn't bad. Each one of these trades I was in, I had an opportunity to close each one of these out at like 20, 15, 10 points, at least 10 points. And so, yeah, obviously the market could have had a nice reversal. I could have caught a lot more. There's plenty of examples of the market having a decent rally. I was looking for us to actually return to 600, and I did leave some on the table, which is fine. You're never going to catch the exact top and the exact bottom. You just want a piece of the middle, and so that's what I was going for. So if I got in at 541, I'm going to show you what I was looking at on the 100 tick chart. So this happened at 9:10. We're going to say 9:10. So if I'm going to show you what I was looking at the 100 tick chart. Yeah, it's going to look messy, and I'm going to close this out so I could show you what I was looking at the 100 tick chart at 5:10, right? 5:10. 9:10. 9:10. This is Mountain Standard. So let's go through and look at that. So November 15th, 9:10. Yeah, this was it. So here's what I'm looking at 9:10. So this might be a little advanced, and this happens really fast, okay? You can right click on your line and select link to all charts. All right, let's try that. Oh, nice. Thank you. Thank you for that one. Oh, nice. There we go. So you could see exactly the candlestick I was looking at. That makes it nice. Right there. So this happens really fast. Okay. So you could see how this happened in less than a minute, in the matter of seconds. Okay. Where we came down, we consolidated, and I got in as we broke out. So I got in on that break right there. 541 right there on the spot. 541 entry. My stop loss was the bottom of this consolidation, and I had this level marked out on the 1 hour or the 1 hour chart. Right. Same thing I went through over here. And if we're looking at this, so sorry if it's taking me a minute. Then I'm going to clear this one. I'm going to clear that. I'm just going to make so I got in right there. And so we finally got that 3-bar reversal to close, and that gave me a lot more confidence. And you can see how we finally got that first 3-bar reversal, and it closed above the previous bar. I got faked out twice. I got faked out one time right there. I got faked out again right there. So there's two bad, whipsaw fake out trades, and that's why I did take losses. And finally, we had one that closed above it. So I don't mind getting in early, and I get in early all the time. That's the risk about getting in early. You lower your probabilities, but you have a better risk reward. So this is more the same. I got in all the way down here at 41, all the way down here. but that's fine. I don't mind getting in early, having a lower probability, but I'm getting a much better risk reward where my risk was the bottom of that, and I was looking for a better reward. And so you can imagine where I closed my trade out and what that risk reward looked like. So if you're looking at it in terms of a pure risk reward, think of it like that. So analyze, and I look at it from a pure statistical mindset where I'm looking at risk reward and probabilities. And if we look at I think I closed it out at the 70s. Yeah, I closed it out at like 75. So if we're looking at the risk reward on this trade, where was it at? So let's do that. I'm going to look at the risk reward on this trade where my stop was at the bottom. So I have an emergency stop where I keep it down here until I'm like, okay, well now I'm okay with putting my stop loss right there. And I'm finishing setting up the trade. So that was my entry, my main stop loss, and I say right there. So I was risking, it was actually a little bit less, a little more than that. So I was risking about 10 points. My emergency stop loss was lower, but once I finished setting up the trade, my risk was 10 points. And my take profit, I closed them out in the 70s somewhere. We'll just say, I think I closed one out at the 80s, but we'll just say 73 just to be safe. I'm not sure what the average was. So that was where I closed them out for. And so if we're looking purely at the risk reward, and you measure the risk reward where you're risking 10 points and you're making 30, that's a 3-to-1 risk reward. And so yes, I could have closed these other trades out at 20 points, 15 points, 10 points each, 1-to-1, 2-to-1 risk rewards, which is okay. But if I'm closing my trades out early and I'm not letting the winners, have that chance to run, it screws up my statistics. And it has nothing to do with dollar amounts. It has nothing to do with anything other than understanding your risk reward and your probabilities. And so having a 3-to-1, and I remember I had one trade go all the way up to 83, but I think this was my average, and we could confirm that here. Now this is my live account. So there it is. So let's see. Yeah, so about, I would say, so I got 74. My average was a little bit higher, so it was better than 3-to-1. Yeah, it was a little bit better than 3-to-1 on this particular single trade. And now, how often do you need to be right if you're in a 3-to-1 strategy? So if you have the confidence for a 3-to-1 strategy, you don't have to be right very often. Correct? What's the percentages? It's about what, 30%, give or take, just because we're talking about averages and nothing's exact. Yeah, it's 33, whatever it's. But the idea is, I don't mind taking these losses as long as I'm closing it out in time, and I'm not letting my losers get bigger than my losses. And some of these were just break even. Some of these were, small losses, and like minus $1,000, minus $500, minus 1,000. I think at one point I was down almost 2,000, and then this one trade I netted almost $3,500. So that is the power of why I love the risk reward aspect of what I do. It's just a simple strategy, and it's the risk reward statistics. It's not for everyone because it's difficult to lose so much and still have that confidence and that consistency to place the very next trade. Trust me, when I was getting in long, and I seen the chat, I seen what the chat was saying. I was buying, and the chat was going off. The chat was just trying to you guys could imagine, who is this guy buying a falling knife, catching a falling knife? He's not a great trader, and all that negativity. Trading, at the end of the day, we make our own decisions. We decide when we get in, when we get out of the markets, and it's the most individual sport there is. It really is. There's only be one person clicking buy, and there's only one person clicking sell. And the fact that 99 or 98% of traders fell makes sense. And so whenever I see the chat doing that, I kind of get more confident. Where I see the chat saying those negative things, I'm like, okay, well, that makes me more and more confident, because guess what? The majority of traders lose. And when I have a lot of traders criticizing a trade, that gets me confident that trade's actually going to be working out. So, yeah, hopefully that makes sense. I mean, there's something to it, right? I don't trade based off of that. It's always fun. I really enjoy everybody who comes to Topstep and watches and gives their opinion. It's nice to see a lot of opinions. Richard, I always care about what the chat says. It makes me excited when they are. I love it when the chat is against me. I do. It's like one of those where, like, if the chat's not against me, then is this really a good trade? If everyone likes my trade, then I don't know if maybe I should just get out of it. But sometimes the chat's correct. Sometimes the majority is correct too. You just never know, and that's part of just following your own process. Process over profits all the time. So coming up, this is like I said, it's an early class. We only have 6 more minutes left. It's going to be a great week. It's a great start of the week. Markets are going up. Bears are losing in all aspects. And oh man, tomorrow's going to be a fun one. Tune in tomorrow. You guys cannot miss. I don't know what Eddie's going to say. I don't know what Andre, but I mean, you if you guys have seen us before, you know how our rivalry is with sports. They are the Chicago Bears. I was the Green Bay Packers. They played today, and they won by 1 point. So it's gonna be a blast. And so are these markets. It already looks like these markets have an increase in volatility, as you could see, where we're up. Like this is a little bit of a spike in volatility. I like that. That gives me some positivity going into tomorrow. There's not a lot of news, right? There's not a lot of news this week. I mean, yeah, there's not too much. There's speakers. I mean, there's a lot of Euro speakers, but not a ton of news in the United States. I mean, we do have this. Okay, here's a big one. This one's a big one. NVIDIA earnings. NVIDIA earnings might move the needle. But other than that, general news is not going to be until the jobless claims. And yeah, it might be a nice, quiet week. I mean, knock on wood. Usually when it's a quiet week, the market tends to go up and to the right, just drift up and to the right, but nothing is a shortcut thing. Let's take a look at this Bitcoin. I'm still with Bitcoin in this demo account. Yeah, Bitcoin is just not my forte. Bitcoin is not my forte. There we go. All right. Okay, everybody. I am going to end it right there. As always, trade for tomorrow. It's so hard for me when I see traders blowing accounts, trade smaller than what you originally think. I seen it today at this open where there was a lot of gaps. You guys seen it. Nasdaq. I mean, yes, the market was very bearish Friday and Thursday. And yes, you get in this mindset that the market can continue, but the market could do whatever it wants. And I seen a lot of traders tonight very upset because they were shorting and the market just kept going up. And man, it's hard to see. Whatever position size you might think you need, usually the smaller is the right one. So I think that's where I'm going to end it. Tomorrow's going to be a great day. Don't miss Dee. She's going to be during the London session. That was fun. And yeah, of course, Coach Jay at the buzzer and on Sundays right before myself. So other than that, take care, everybody, and I will see you bright and early tomorrow morning, if not tomorrow night.